Time now for your Trader Blitz. First up on the Blitz is JD.com. They're launching an extensive revamp of their operation. They are splitting into 3 primary business units. The ADRs of this Chinese company down 47% this year. Stephen Weiss.
Yeah, I'm still not buying it. It's what we've seen in a lot of these Chinese stocks, and I own a few that are Cayman domiciled like this one is that they're basically controlled by the ETFs. And while the negative sentiment continues on China, these will not rebound no matter the fundamentals. Plus, China's slowing quite a bit. So the economics there just don't make sense.
Okay, next up on the Trader Blitz is NVIDIA, once a trader favorite. Now RBC Capital Markets cutting its price target to $200, but still, John, that's 56% upside, even with the cut on the price target. You own calls.
I own calls in here, the 135 calls, Brian. Got a couple months for them to play out, so hopefully that works out. We also had RBC reiterating them with the buy because of the gaming side of their business. They're saying it's under-loved, and I'd certainly say, given where the stock is, $126, $127 a share, I think it's got a lot of upside.
Okay, Apple supplier Foxconn. This is a big story. Big Chinese company may start making higher-end iPhones in India next year. That's according to a report from Reuters. Joe, what do you make of this?
I make of it that this is probably the 6th or 7th time we've heard something in the past year that's going to be a tremendous headwind to the fundamental business of Apple. I think when you look at Apple right now, it is simple. If you are an owner of Apple, you're probably holding on to it because you believe in the business long term, and I agree with that investment strategy. Otherwise, if you're sitting and you don't have a position in Apple, I mentioned at the top of the show, you want a point of reference. 146.83 is the low yesterday. 157 is the high yesterday. If you get above 157, I have no problem you stepping in, initiating a long position, and getting back out below 146.
Labor costs have gone up in China, Joe. What if this will help them bring the cost down? They can produce a lower cost iPhone for the Indian market.
So, again, you're pointing towards a fundamental story that I don't disagree with you, Brian, but in terms of making the philosophical difference, whether to buy Apple here or not, the fundamentals of this company we already know. There's nothing new that's come out fundamentally.
All right, Rob, so let's talk about emerging markets. That's a big, you're not picking a stock, you're picking basically all the world minus the developing markets here. What makes EM attractive, and how are you playing it?
Well, I think, we're down a lot year to date on EM, down 16%. But since we've upgraded, what's gone quietly unnoticed is EM has really outperformed in this sell-off. It's down, a couple percent. And I think it's a price and growth story here. We're trading at a P of 11 and change times on emerging market earnings. We're growing both at the economic level at world-leading rates and at the profit level at 9+%. And when you marry all those together, I think it represents really good value.
Do you just buy the EM, though? Because that's really a China and that's an Asia play.
I'm really not able to talk idiosyncratic positions. However,
I mean, how about this? Are you bullish on Asia? Because that's really an Asia, EM is an Asia play.
I am. We are.
Okay, it's Taiwan, Korea, and China. In that, that's 9 of the 10 it was, with I think a South African gold company thrown in for good measure.
And there's a lot of stimulus coming out of China right now.
Yeah, it's the iron fist, not the velvet glove. That's what they talk about.